Hello, welcome back to my channel. Today I'm going to be looking at VA loan. Before I begin, please consider liking and subscribing, and let's get right into it. So, what is a VA loan? Now we're going to go straight to the va.gov website. VA loan is a loan that VA helps veterans, service members, and eligible surviving spouses become homeowners. So it helps service members buy homes, and it is an interesting program because it's different from FHA. If you want to look at my FHA, I don't want to call it review, but FHA video, uh, it's on this channel. I'm gonna link it at the end of the video. So the VA loan, it is a program that helps service members, former service members, get the buy a house. And the main advantage of a VA is there is no down payment required. Some lenders may require down payments from borrowers using a VA home loan guarantee. So what in the world is a home loan guarantee? Home loan guarantee is just like an assurance by VA that in case the borrower defaults on the loan, VA is gonna pay the loan. So it's just an assurance. It's like a guarantee. A guarantee if this borrower flakes on the loan or does not pay the loan, VA is gonna step in and pay for it. Also, it offers low interest rates, and the closing costs are a bit lower. So let's look at some of the uh, guide to VA loans. Let's look at the pros and the cons. I saw this article on NerdWallet. It's about VA loans, and some of the pros of VA loan is there is no down payment, like I mentioned before, or mortgage insurance required. It's not like FHA where it's mandatory to have homeowners insurance throughout the term of the loan, whether it's 30 years or 15 years. You have to have homeowners insurance throughout the term of the loan on FHA. But on a VA, it's different. You get lower rates compared to conventional mortgage loans. I'm going to do a video on conventional mortgage loans. Probably it's already out now. You can take a look at that video. And the limited closing cost. This means that there are lower closing costs because VA has some rules. For example, it limits the broker. Let's say the broker, if they are charging, there are two types of compensation that the broker can charge you. They can charge you either borrower paid compensation, where you, the borrower, you are paying the broker's compensation at the time of closing, or it can be lender paid compensation, where the lender, who is in this case is how can I say, like the bank, the lender, the one giving you the loan, the bank giving you the loan is the one that's gonna be paying the broker's compensation during it's built into the loan amount, into the mortgage. But in this case, back to the point, if it is borrower paid compensation, VA is limited to 1%, so the broker cannot charge you more than 1%. So that also lowers the closing costs. So that's another pro of the VA program. Now, VA loans can be assumed. What does that mean? That means that if you're ready to sell your home, you have the option of allowing the other buyer to take over your existing mortgage. Now, some of the cons of VA loans are the VA loan funding fee. So it does not require mortgage insurance, but it does come at an extra cost of a funding fee. So what in the world is a VA funding fee? VA funding fee, it's it's a fee that it's paid one time. It's a one-time payment. It's a one-time payment made by the veteran, service member, or survivor who's requesting the loan. It helps lowers the cost of the loan for U.S. taxpayers. All that it's extra stuff that's not really necessary, but what it means is that if you're buying a loan, that you will need to have a VA funding fee. Think of it as what's it called? Like a mortgage insurance premium in FHA. I know I'm sounding gibberish if you're not familiar with with those terms in the industry, but if the VA funding fee, if you're buying the house, let's say quick example, VA funding fee is gonna be something like this. You're gonna be buying a house, its purchase price is like 300,000, but then with the funding fee, think of it as a mortgage insurance in quotes, it's gonna be additional amount, so you're not gonna just get the 300,000 exact, you're gonna be 305,000, so it's the extra 5,000 funding fee. So you can be exempt from that fee. Exempt meaning that you won't have to pay that extra 5,000. In these cases, in these scenarios, if you are receiving VA compensation due to disability, you will be exempt from that. And also, if you are very disabled, sometimes I've seen that if you're very disabled, you can be exempt from property taxes. That's a case by case analysis, but it happens in these VA loans. You will also be exempt from this funding fee if you are getting like through if you're disabled and you're receiving retirement or active duty pay, or receiving dependency and indemnity compensation as the surviving spouse of a veteran. Can also be exempt if you're a service member on duty who before or on the loan closing date you have received a Purple Heart. You're gonna be exempt from that funding fee. So there is a feature here that VA, most of these government-backed loans like FHA, VA, USDA, they require appraisals. So appraisals, an appraiser is going to have to come look at the property, make sure it's good enough for a human being to live inside there. And in this VA, you can go on the VA website. They have a feature where you can find rough estimate what the appraisal fee is going to be. So this is on the VA website. If you go down, scroll down, you can see how much you might end up paying based on the state. You can pick a state anywhere. Let's say you are a veteran and you are buying a home in let's pick a state in South Carolina. So let's select South Carolina. It's gonna pop up and you can pick based on the county. And if it's single family, you're gonna see roughly an appraiser is gonna cost 525, things like that. So it's several features that are on this VA site that's gonna help you know how much you're gonna be paying an appraiser if it is a manufactured home or a multi-family, and based on the counties they're all listed there. You can pick any state that you're buying the home. I don't know, even if you're in Idaho or wherever, it's just gonna pop up and you're gonna be looking based on the county. And if you can't find your county, you can go single family. And the important thing is VA, you use it for primary homes. Primary homes, that's the home you're gonna be living in. That's what the mortgage is for. So that's really okay. No, that's a con. Okay, let's look at the con, the funding fee. I got ahead of myself there. So the funding fee is a con on VA loan. Purchase loans are only for primary homes. You can't use VA to buy an investment property or a vacation home. So only the house that you're gonna be living at, your address, that's where you're gonna be, you know, you can buy the VA using VA loan. Not all properties are eligible. The appraiser will have to evaluate the home and see the value and if it meets the minimum property requirements that are required by the VA. So those are some of the things that restrict you if you're gonna be purchasing a home through VA. But the main aim, the main advantages are you get lower rates and no down payment. Also, the closing costs are a little lower and it can be assumed. So that was just a short, I don't know if it's very short review, but a quick look at VA loan program. If you like this video, please consider liking and subscribing, and I will see you on the next one.